The assumption in this diagram is that all the transactions were done on credit. So we have the suppliers, the business, and the customer. What happens is the retail business purchases goods from the supplier with the purpose of reselling them to the customer, who is the end user. When the retail business purchases from the supplier, it records this transaction in a book called the Purchases Journal, a book in which only credit purchases are recorded. The retail business then sells the goods to the customer. This sale is recorded in the retail business in a book called the Sales Journal, which only credit sales are recorded. So the Sales Journal only enters credit sales. So after the customer buys these goods, if they find the goods to have reasonable defects, they will return the goods to the retail business, and these are called returns inwards. These are then recorded in a returns inwards journal, a book in which only goods returned by customers are recorded. The retail business will then reconsider whether to return these goods to the suppliers or maybe resell them at a lower price. If the business decides to return these defected goods to these suppliers, we call these returns outwards, and these are recorded in a returns outwards journal, a book in which only goods returned by the business to the suppliers are recorded. So yeah, we've already covered 4 of the books: the Sales Journal, Purchases Journal, Sales Returns Journal, Purchases Returns Journal, and we are only left with 2. Let's get it. A cash book. A cash book is a book in which cash items or cash transactions only are recorded. Examples include cash sales, cash purchases, expenses paid by cash, cash or bank deposits. From the cash book, we have a smaller book called the petty cash book. It's a book in which cash transactions of a small value are recorded. Petty means nothing serious. That's why transactions of a small value are recorded in this book, petty cash book. That's where the name was derived from. Examples of the transactions that entered the petty cash book include the purchase of a pen, the purchase of rubber bands, the purchase of tea, the purchase of lunch. These are items of a small value, and these should be on cash, not on credit. So it only records transactions done on cash which are of a very small value. Lastly, we have the General Journal. The General Journal is a book in which all other items not mentioned in the books above are recorded. So what are the examples? We have provisions and general expenses. Well, so these are the books we have. These are the other terms which may be used in calling these books. So the Sales Journal is also known as the Sales Day Book. The Purchases Journal is also known as the Purchases Day Book. The Purchases Returns Journal is also known as the Purchases Returns Day Book. Sales Returns Journal is also known as the Sales Returns Day Book. So folks, this is all in all we have on this chapter.